same class?
Yeah. Hi,
Oh,
Professor.
the professor is on the line now.
Yeah.
Yeah. Oh, he's on mute.
Hello, Professor. How are you?
Hi, professor.
Professor, your
You're on
sound,
mute.
you are mute.
We're not hearing anything.
All right, how about now?
Yes, it's
It's
good now.
good.
Good, everybody can hear me?
Yes, sir.
All right, today we're going to talk about chapter 11 and chapter 12.
Professor,
Yeah,
can I ask some question?
sure.
Did you receive my email?
In regards to,
Regards to exam, because I have another accounting 350 exam on same day.
well,
Same month.
my exam is a 6, and if you have a conflict, I'll make arrangement for you to take it later that day.
No, because I cannot take 2 exams in same day.
Why not?
Because like so many pressure is final and it's all cumulative.
No, you will take it the same day.
No, Professor, I cannot take
Registrar said if you have more than 3 exams the same day, then they could reschedule, but not 2. Okay?
It's gonna be hard, Professor.
You should have thought about that when you register for the course.
Because this class was on Thursday, or sorry, Tuesday and Thursday. That's why I chosen 2 different days. And that class is on Monday and Wednesday.
Well, the exam going to be on Monday. There's no procedure for anybody that have less than 3 exams to make other arrangement, and I have to follow registrar procedure. I cannot give you an exam on a different date unless there are extenuating circumstances. Having another exam on the same date is not an extenuating circumstances. Okay.
Professor, your exam is going to be on a Monday, right?
Yeah, Monday.
I think it clashes with my econ class on a Monday evening at the same time, like 6 o'clock.
Well, again, I could have you take it later at 8 o'clock.
Okay.
Okay. Same
Okay.
goes for
Yeah.
you.
I'll verify that.
All right. All right. Let's get into our lecture. So I'm going to share my screen. Now, we're going to talk about chapter 11 and chapter 12. And chapter 11 and 12, both chapters deals with internal control. Now, what they did in the 16th edition, they take one chapter, which was chapter 10 on the 15th edition, and they break it up into 2 chapters, and they add a few things. And the few things that they added are mostly things that are covered on the graduate course. So I'm going to stick to the undergraduate level, and my outline is going to be from chapter 10 of the older text, but it covers everything that I want to cover on the new text. In the new text, you're also going to cover, I will tell you when I move from chapter 10, from chapter 11 to chapter 12, okay? Items 1 to 4 on the agenda, on the learning objectives, are covered in chapter 11, and the other 4 learning objectives are covered in chapter 12. So let's look at our learning objectives. 1, describe the 3 primary objectives of effective internal control. 2, contrast management responsibility for maintaining internal control with the auditor responsibilities for evaluating and reporting on internal control. 3, explain the 5 components of Costco internal control. And 4, obtain and document an understanding of internal control. These 4 learning objectives are covered in your chapter 11 of your text. The next 4 learning objectives are covered in chapter 12 of your text. Number 5, assess control risk by linking key controls and control deficiencies to transaction-related audit objectives. Number 6, describe the process of designing and performing tests of controls. 7, understanding Section 404, which is the Saturdays Oaksley Act, requirements for auditor reporting on internal control. And 8, describe the differences in evaluating, reporting, and testing internal controls for non-public companies. So we're going to talk a little about public companies and we're going to talk a little about non-public companies. But in the first part of the assignment, we're going to talk about both together, and in section 7 and 8, we're going to break them apart. Okay? Now, the 3 primary objectives of internal control. Management has 3 broad objectives in designing an effective internal control system. Any company you're dealing with, whether public or non-public, you want to comply with laws and regulations. You want to have reliable financial reporting or reliable financial information. And you want to be operating with efficiency and effectiveness, because if you're efficient and you're effective, you will maximize profit, and that's the overall objective of any company that we are dealing with. Contrast management responsibility for maintaining and reporting on internal control with the auditor responsibility for understanding, testing, and reporting on internal control. So what are management responsibility? As management of the company, you must establish and maintain the entity internal control system. You're responsible for the design and the implementation. And the design and implementation are based on 2 key underlying concepts. One being reasonable assurance, and 2 being inherent limitation. Reasonable assurance. What is reasonable assurance? The system of internal control must give management reasonable assurance that their objectives are met. What are their objectives? Well, the company is complying with laws and regulations, they're having reliable financial reporting, and the company is operating efficiently and effectively. So any system of internal control must give management that. 2, any system of internal control has certain inherent limitation that the auditor cannot compensate for or management cannot compensate for. So we must recognize the fact that regardless of how good a system we have, there will still be errors or irregularities. So the system of internal control is designed to minimize error and irregularities, but we will never get it to an absolute 0 amount. Now, when we talk about internal control, what are we talking about? We are talking about the policies and procedures that an organization implements to safeguard their asset and to ensure that they have reliable financial reporting. So we're talking about all the policies and procedures. Every organization are different. As some of them policies and procedures may be generic, other policies and procedures may be unique to the organization themselves. Management, Section 404, reporting responsibility, the sadness of the act, and management reporting responsibility. Management of all public companies are required to issue an internal control report that includes the following. So along with the financial statement, and along with the other of management report that they are submitting, management also have a report on internal control. The auditor also will have a report on internal control that we talked about in chapter 3. In management report, they will have an acknowledgement of their responsibility for internal control. So they will embrace their responsibility of internal control. And they're going to outline the results of annual assessment of the system of internal control. So they'll tell you what their responsibilities are and how do they assess their system of internal control. Management must evaluate the design of internal control over financial reporting, and they must test the operation effectiveness of those controls. Let's take, for example, our college, York College. York College have a system of internal control where at any entrance or exit that is open to the public, there's a security guard there. And the security guard there is to observe what's going on, to check your ID that you have authorized access to the campus. And if you are leaving with something that looks like it belongs to the campus, the guard would question you. Now, management must also test on a sample basis to see that those controls are working. What if instead of the guard being on Guybrush Boulevard, they're on Jamaica Avenue shopping for Christmas? Then anybody could come into the campus and anybody could leave with assets that belong to the campus. So management must periodically check to see that the guard is there, that the control is operating as prescribed. And here's a sample of what management report on internal control look like. A sample is in your textbook. You could read through that. I'm not going to go over the detail. And they give you some sales transaction related audit objective. You can look through that. I'm not going to go over that in detail. We did that in one of the prior chapters, chapter 7. Auditor responsibility for reporting on internal control. Well, for one, the auditor must obtain an understanding of internal control. They must understand what control are there in place. Why? Well, for two reasons. One is required by the principles, but two also, if we understand what controls are there in place, then we know what could go wrong. Now, think of this. We all are involved in internal control on a daily basis without calling it internal control. When you leave your home in the morning for school, what do? You lock the doors. You make sure the windows are locked. That's a system of internal control to safeguard your apartment or your home so that your asset doesn't get misplaced, that someone doesn't come in and take your stuff. Some of us may have an alarm on the home. Does it mean that someone cannot break in the home? No, someone could still break in the home. Those of us who drive to school, we got a car. When we park in the parking lot, we lock the door. We wind up the windows. Some of us also have an alarm on the car. Why do we have all of these? To mitigate the chances that somebody will steal or break into a car. So if someone understands what controls you have on your car, then they could design procedures to bypass this control. If you understand the limitation of those controls, you could understand what can go wrong. So the auditor, by understanding controls, they understand what could go wrong. The auditor will also perform tests of controls to make sure that the controls are working as prescribed. They will test significant account balances, the major account, the larger account, the more important account. They will test the balance to see the balance are reasonable, accurate. They will test classes of transactions to see that they give rise to reasonable, accurate balances. For example, if we look at cash, we will test the class of transactions surrounding cash to ensure that the ending balance of cash is accurate. And then we're going to correspond that cash to what the bank is showing by obtaining a bank confirmation. We'll have disclosure and related financial statement assertions. If things are not proper, we will disclose it. If things are proper, then we will also disclose it. So that the public will have an understanding, or the user of the financial statement will have an understanding of what's going on. Section 3, explaining the 5 components of the CASO internal control framework. CASO stands for Community of Sponsoring Organization. So you want to write that down there. Committee of Sponsoring Organization for the Treadway Commission. This is something that Congress was involved in going back, way back. So the 5 components of CASO internal control framework. The first one being the control environment, and the control environment, it looks like as an umbrella for the other 4 components. So the 5 components, we have the control environment, then we have risk assessment, we have control activities, we have information and communication, and we have monitoring. What are the control environment? We talk about an organization control environment. What are we talking about? We're talking about the integrity and the ethical values held by that organization. It consists of the action, policies, and procedures that reflects the overall attitude of top management, directors, and owner. The attitude of top management trickled down to the rest of the organization. Top management commitment to competence. Their commitment to competence will trickle down to the rest of the organization. If you hire competent staff, the work will be done in a proper manner. If you hire incompetent staff, then the work will be done incompetently. Now, if you look within your organization, as you're approaching graduation and you're looking for a job in the accounting profession, a lot of you are going to target CPA firms. And you'll see that the big 4 CPA firms, if you don't have a certain GPA and certain characteristics, they're not going to be interested in you. Why? Because their standards for competence is very high. They wanted work to be done competently, so they're hiring staff that they feel will make the best competent worker. Board of directors and audit committee participation. The board of directors are the top management of an organization. And the culture of that top management dictates the culture of the rest of the organization. The audit committee we talk about in chapter 1 and chapter 2. The audit committee acts as an intermediary between the top management and the auditor, thereby fostering auditor independence. Management philosophy and operating style. Some organizations are lean and mean, others are very laid back. Some organizations avoid risk, they are risk avoiders. Other embraces risk. Management philosophy and operating style will dictate their human resources policies and practices. And that will ultimately dictate the quality of staff that they hire or the characteristics of the staff that they hire. The organizational structure. Define the existing lines of responsibility. Who is reporting to who? Now, the organization must have a proper organizational structure that is functional and that meets the needs of the organization. Risk assessment. When we talk about risk, we're talking about uncertainty or the likelihood of something occurring or not occurring. When we're looking at an organization or a cooperation and we talk about risk, we talk about the likelihood of the organization not attaining their objectives or not reaching their goals. Management have to identify the factors that may increase risk. They must estimate the significance of the risk. How significant is this risk in preventing us from obtaining our goal? If it's very significant, they may want to try to mitigate it. Let's take an example, fire. What are the chances of our organization have a fire? Well, how do we mitigate a fire? If the chances are high, we could put in special equipment that are designed to contain fire. Fire extinguisher, sprinkler system. In the event of fire occur, these things will mitigate the fire. We may also want to take adequate fire insurance. In case the fire occur, we could file for an insurance claim. So if we think the risks are significant, we will put in these measures that will mitigate the risk. Assess the likelihood of the risk occurring and determine action necessary to manage the risk. These are some of the actions to manage the risk. If we think that the risk of a fire occurring is high, we will put in a fire extinguisher. We'll put in a sprinkler system so that if a fire occurs, the sprinkler will come on and out the fire. Now, if we look at office buildings, the risk of fire is not that high. But if we're looking at establishment like restaurant, the risk of fire is higher, right? And then we may want to insure that risk. So in the event that the fire occur, we're not going to be totally at a loss. We could collect some money from the insurance company. Number 2, control activities. There are 5 categories of control activities. The first one being adequate separation of duties. Adequate separation of duties. We want to separate the custody of asset from the accounting for the asset. Why? If you are in custody of the asset and you also account for it, then you could take some asset and put it in your personal use and change the count. So if I have 100 chairs and I'm keeping account of how much chairs and I'm the only person keeping account, I take 50 chairs home and change my accounting records to show that I have only 50 chairs. So to prevent that from occurring, the person who has the custody of the chairs should be separate from the person who is keeping the accounting records for the chair. Authorization of transactions should be kept separate from the custody of the asset. If you go to any appliance store and you purchase some appliances, some large appliances, refrigerators, stove, etc., your transaction is going to be initiated in the store. They'll give you a receipt. You'll take that to the warehouse, and the warehouse manager will have a unit delivered to you, and you will sign that you receive it. They have the custody in the warehouse, but the authorization is done from the store in a separate department. The third one, operational responsibility are kept separate from record keeping responsibility. Why? Because every organization have a budget, and the budget is used to fix responsibility to the various departments. At the end of the year, you compare the actual performance to the budget, and you analyze the variance to see how well the department performed. Now, if I'm having operational responsibility and I could change the record and my department performed poorly, I could change the record to show that my department performed well. So you want to keep those functions separate. You also want to have adequate separations of duties within an EDP environment, within an electronic data processing environment, or IT duties should be adequately separated. The second category of control activities are proper authorization of transaction and activities. Every transaction or activities should be properly authorized by those who are in charge of authorization. There are two types of authorization we're going to talk about here. There is general authorization, and then there is specific authorization. Think of this. You go to May's department store to get a suit or a dress. You see this beautiful, let's talk about the dress, because ladies are more picky about these things than men. And they're more particular. They want to look beautiful. And that's nothing wrong with that. Every woman should want to look beautiful. You go to May's department store, you're looking for a dress. Why you have this date this weekend, you're going to a wedding. You go there to the sales rack, you see 100 dress, and they got a price tag. If you want to buy that dress, you could take it to any sales associate, and they could charge you for the price for that dress. That's a general authorization. Any sales associate could charge you the price for that dress. What if you saw the dress for $300, but you don't want to pay $300 for that dress? You want to pay $150. Well, you take the dress, you drop it on the floor, you step on it a couple of times. Then you take it to the cashier and you tell the cashier, you know, this is the only dress that fit me very nice on this rack. It's perfect, it's got all my curves, I really love it, but it's the only one and the only one of this size. However, it's stained. And I'm not going to pay $300 for it, but I'm willing to pay $150. Can the cashier charge you $150? No, they cannot. The cashier will call the manager. The manager will come, examine the dress. You will point out to the manager a very nasty picture of this dress that is not good for resale, right? Because you want him to discount it. And the manager figures Christmas coming, you know what? Let's get rid of the dress. I'll give it to you for $150. So he tells the sales associate to charge you $150. That is a specific authorization that applies to only that dress. You cannot go and bring another dress and expect to pay $150. So specific authorization only applies to specific transaction. General authorization applies to any transaction. The third control activities, adequate documents and records. Adequate document and records. You want pre-numbered consecutively sales invoice, checks, and other documents so that you could account for the sequence. If one is missing, you know. These documents, your sales documents, must be prepared at the time of the transaction. And they must be designed for multiple use. In the old days, when you go and you make a purchase at a store, the sales invoice is in triplicate. One goes to you, one goes to the cashier, and one goes to accounting. Today, everything is done electronic, but electronically is done in triplicate. They print a copy for you, they have one copy saved for themselves, and one copy that is electronically forwarded to the accounting department. They should be constructed to encourage correct preparation. They should be simple to prepare, not difficult. Anybody with a high school diploma could look at it and figure it out. The easier it is to prepare, the more accurate will be the results. When something is complicated, it's much easier to make errors. The fourth control activity is physical control over assets and records. This is what you do when you left home every day. You physically secure your home. You physically secure your car. The most important type of protective measure for safeguarding assets and records is the use of physical precaution, which we all use every day. We will lock up the house. We make sure all the windows are closed so the rain will not come in and damage our assets, and someone will not jump through the window to steal our stuff. We lock up the door. We'll put the alarm on the house. We'll do the same for the car. When you go to study in the library, you make sure you keep your books near you where you can keep an eye on them. Why? Because if you don't, you see, asset is something that likes attention. And if you don't pay attention to them, they leave with the next person that show more attention. And if you look at the most liquid asset, cash, if I left for $500 in a room and I left, I come back half an hour later, guess what happened? If people are in that room, that money will go with the person that showed them more attention. So that's number five. Number four, number five, independent checks on performances. We have all these controls and they're good. We must have some way of independently checking to see that these controls work the way they are prescribed. If you look at a bank reconciliation, the bank reconciliation is an independent check on your cash receipts and cash disbursement. You reconcile them to the bank statement. Independent checks are built into the system. If you look at your schedule of accounts receivable and schedule of accounts payable, they are independent checks to make sure that your sales and payments are posted, your accounts receivable posted correctly, and your purchase and payments are posted correctly. So you must have some independent check to make sure that these things are working as prescribed. So we talk about, let's go back so we're not lost. We talk about the 5 components of internal control. We talk about control environment. We talk about risk assessment, and we talk about control activities, the 5 categories of control activities. The next thing now is the information and communication. When we talk about the information and communication, we are talking about the accounting system. So information and communication, the purpose of the accounting information system and communication system. Now, the accounting system itself will communicate. If you look at net income is a very powerful communication or performance of the entity. So the accounting system will initiate transaction, will record transaction, and will process transaction to generate a report. And those reports maintain the accountability of the related asset. So the fourth category of the system of internal control is the information and communication. And the last category of causal system of internal control is monitoring. Periodically, we must monitor the system to see that it's functioning as prescribed. Think of this. We have a warehouse. And in that warehouse, every night we have a security guard on the door of that warehouse, night and day, 24 hours. And we have cameras in that warehouse and inside and out of the warehouse that monitors the surrounding to make sure that nothing goes wrong. Those are good internal control for the warehouse. If we do not monitor that system, what if the cameras are not working? Then is that control good? No, it's not good. What if the security guard is not there? Is that good? No. So we must check to see if the security guard is there. He's aware of what's going on. And we don't have to check every time, but periodically. And we must monitor the system. In New York, everybody lock up their house and lock up their car. Down here in Florida, where I live, once we are home, my garage door is open all the time. And the garage door is, you could come to the front door, and the front door is not locked once we're home. Many times I leave my car outside unlocked. I have an alarm. I have locks on the door, but I don't lock it. I don't press the button to put the alarm on. Until about 2 or 3 years ago, I had a rental car because my car was in an accident, was in the shop. And I go out in the morning and I noticed the car back door was open. So I closed the back door. I figured I'll probably leave it open. But I had a gift in the car for one of my friends whose birthday is the same as mine, December 21st. And I went to deliver this gift. Then I realized the gift was not there. At that point, I realized that somebody came into my car and took out stuff. And since then, I've been locking my doors and putting my alarm on. So although the car is equipped with these things, if I don't put them on, those systems are no good, right? So that takes care of the 5 components of causal system of internal control. Next, we'll move on to obtain and document our understanding of internal control. How do we obtain an understanding? And why do we have to document the understanding? In one of the previous chapters, I think it was chapter 8, when we talk about process for understanding internal control, and we talk about that, we'll discuss these things in chapter 11 and 12. Well, phase 1, obtaining and document understanding of internal control, which we're going to talk about in this chapter. Phase 2, assess control risk, we'll talk about in the next chapter, chapter 11. Phase 3, design and perform and evaluate test of control, we talk about in chapter 12. Phase 4, decide, plan, detection, risk, and substantive tests. We talk about in chapter 12. So item 4 will be the last topic we're talking about in chapter 11. Note this is an older version of the text I'm using, which where chapter 10 was one chapter on internal control that comprises of chapter 11 and 12 of the new text. obtain and document understanding of internal control. Auditing standards require auditor to obtain an understanding of internal control for every audit. Go back to chapter 2 when we talk about the 10 standards of generally accepted auditing standards. We have the standards, the general standards, and then we have the standard of fieldwork. And the second standard of fieldwork require an understanding of internal control. So the standards require the auditor to understand internal control. But besides the standard, the auditor needs to understand internal control, because if they understand what are the safeguards that are present in the organization, they understand what errors and irregularities can occur. Here we talk about errors being unintentional mistake, which I covered in one of the previous chapter. I can't remember if it's 4 or 5. And irregularities being intentional misstatement, which we will categorize as theft or fraud. So the auditor understands the control environment and understand what controls are in place. They will also understand what errors can occur, or what fraud or theft could occur in the organization, or what illegal acts can occur in the organization. Procedure to obtain an understanding. Well, we'll have inspection. We'll inspect documents and records. We'll have inquiry. We'll inquire of personnel. And we'll observe. We'll observe employees. Let's take, for example, the warehouse we were talking about, where we have cameras and a guard. What documents we may expect? Well, the company may annual or every few months do an evaluation of the system. We want to look at that evaluation, see if the system was working. That evaluation is generally done by the internal auditor. So we want to look at the work of the internal auditor to see if they document that these internal controls are functioning. We want to ask, we want to inquire, ask personnel how they do things, what they're doing. Ask the guard, are you there on duty every night? Are you aware of what's going on every night? Are these security cameras working? We may go and observe the employee. We may pass by one to see if the guard is on duty, right? We may observe the employee. Now I'm going to jump over to chapter 11. Sorry, not chapter 11, chapter 12. I just finished with discussed in chapter 11. There are other things discussed in chapter 11. We're not going to concern about those at this point. We're only going to concern about the things I've talked about so far. And that is about 2/3 of chapter 11. Chapter 12. How do we document for understanding of internal control? There are 3 methods that auditors generally use to document their understanding of internal control. One is they write a narrative. They give a narrative, they write an essay describing the system. The second is a flow chart, where we draw a diagram documenting the system. And the third is an internal control questionnaire, where we have a series of questions regarding internal control that have answers yes, no, or not applicable. And we'll ask the employees these questions. The first one being narrative. Narrative is my least favorable. Not that it's not very useful, it's very useful. But most of us hate writing and reading. So it's kind of the boring way of documenting the system. Nevertheless, it's a very useful way. We will narrate the origin of every document and record in the system. We will document all processing of these documents that take place. We will document the disposition of every document and record in the system. And we will indicate the control relevant to the assessment of control risk. What is control risk? Control risk is the likelihood that errors and irregularities will not be detected by employees in performing their normal tasks, employees and management in performing their normal tasks. So errors or irregularities will not be detected by the existing system of internal control. Evaluating internal control operation. Update and evaluate the auditor previous experience with the entity. We will look at last year audit files. Look at what document, how internal control was documented. Check to see if anything changed. If anything changed, we will update the file. We'll ask client personnel if anything changed. And if it does, we need to update last year's file to bring it current. Examine documents and records to see if anything changed from the way they were doing things last year. And if it does, we need to update our permanent file. Remember chapter 7, we talk about the current file and the permanent file. The internal control system will be documented in the permanent file. We'll observe the entity activities and operation. We'll perform a walkthrough of the accounting system. What is a walkthrough of this accounting system? We'll take a transaction from its occurrence and process it through the system to make sure that it is processed properly up to when the transaction gets to the financial statement. Assess control risks by linking key control and control deficiencies to transaction-related audit objectives. Control risk, the risk that errors and irregularities will not be detected by the existing system of internal control, or it will not be detected by management and employees when they're performing their daily task. Assess control risk. Are internal controls sufficient enough for us to audit the financial statement? What do we mean by that? Is there adequate document for us to do a proper audit? If there are no documents, it's impossible to do an audit, or almost impossible to do an audit. So we have to determine that the financial statements are auditable. There's enough supporting documentation so that we can audit the financial statement. We want to determine the assessed control risk supported by the understanding that we just obtained. Is control risk high? If control risk is high, which means that there is a higher likelihood that errors and irregularities will not be detected by the existing system of internal control, then we'll have to do more of what is called substantive testing. We'll have to do a more extensive test. If controls are low, then we'll do less testing. If controls are weak, we'll do more testing. If controls are strong, we'll do less testing. Use a control matrix to assess our control risk. Many auditors use the control risk matrix to assist in the control risk assessment process at the transaction level. We'll design a matrix system to evaluate our control. The control risk matrix. We'll identify our audit objectives. Our audit objectives that the financial statement are fairly stated. We'll identify existing controls. What are some controls that are present that will lead us to believe that? We will associate these controls with those objectives. And we'll identify and evaluate control deficiencies. What do we mean by control deficiencies? Absence of key controls. Control weaknesses in the existing system of control, internal control. We'll identify and evaluate the control deficiencies, the significant deficiencies, and the material weaknesses, and we will communicate those to management. What are these deficiencies? Are there existing controls that are present? What are these existing controls? Are there some key controls that are absent? What are these key controls that are absent? Consider the possibility of compensating control. Is there another control that is present to compensate for this absence? Let me give you an example. We said for there to be proper system of internal control, there should be adequate separation of duties. Going back to the days when I was in New York about 20 years ago, there was a grocery store on Jamaica Avenue, somewhere about 130 something street. And that grocery store just had one person that runs the grocery store. That's a weakness in the system of internal control. One person does everything. However, that weakness in internal control was not a concern because there are other compensating control that were present. What are the compensating control? That person who runs the store was the owner. So is he going to steal from himself? No. Is he going to misappropriate his own assets? No. Also, that owner have a set of convex and concave lenses placed at various positions in the store that he could, when you look at him, he looked like he's looking at the road, but he's looking at a mirror in front of the store that shows him everything in the store. So when the kids come from school, they go in the back of the store and they figure he's not seeing and they could steal some candies. No, he's seeing them. And they wonder how this guy know that they took candies, right? But he had mirrors that were placed very strategically. So those control compensate for the fact that you're not walking around the store and see if anybody's taking the goods. So those were the two compensating controls that he had, which make his system of internal control very effective for that little store. Then we want to determine their significant deficiencies and material weaknesses. And if there are, what could possibly go wrong? Because these deficiencies are there. And then we want to test to see if those things actually went wrong. Once we finish testing if they went wrong, then we need to communicate to management, preferably in writing. We must communicate in writing significant deficiencies and material weakness to the audit committee if it's a large company, if not to the management if there's no audit committee. The auditor will have a letter to management. In that letter, they will list significant control weaknesses, and they will give management some recommendation for improvement of their operation. Item 6, designing and performing tests of controls. How do we test these controls to make sure that they're working as prescribed? The procedure to test the effectiveness of control is in support of a reduced assessed control risk are called tests of controls. What are these procedures to test control? Again, we'll inquire of the client personnel. We'll examine documents and records. For example, if a bank reconciliation is done every month, we'll examine the reconciliation, see if it's done every month. We'll re-perform certain of the client procedure. We may take one bank reconciliation and redo it to make sure it's done properly. We'll observe certain control-related activities. For example, if there should be cameras on the warehouse, we'll check to see their cameras and that the cameras are working. Extensive procedure. We'll look at prior audit work papers to see if there are any evidence that we could rely on. We'll test controls in the area where there are significant risks. We may justify in testing less than the audit period because we may test 1 or 2 months and see if they are working well and predict that the whole year they were working well. Or we may test 1 or 2 months and see if they're not working properly at all and decide, you know what, we're going to ignore internal controls. We're going to just do substantive tests. However, every public companies are required by law to have a proper system of internal control. So if controls are not working well and it's a public company, we do have a major problem on our hands. However, if it's a private company, we could work around it. Here, they give you a little diagram of the assess control risk, and then we decide the plan detection risk and design substantive tests. Now, it's a private company and controls are very weak, we can go on to do substantive testing and substantiate each account balances. However, if it's a public company and they're required to have a proper system of internal control, then we do have a problem. So here we're gonna segregate them into the two categories. First, we're gonna talk about the public companies in Objective 7, and then we'll talk about the private companies in Objective 8. So Section 7, understanding Section 404 requirements for auditor reporting on internal control. As the auditor of public companies, we have to issue a report on internal control. The scope of the auditor report on internal control is limited to obtaining reasonable assurance that material weakness in internal control are identified. So we have to identify the weaknesses and we have to encourage management to correct them. If there are no material weaknesses, we'll give an unqualified report on internal control. No material weaknesses, no scope restriction. If there are one or more material weaknesses, we have to give an adverse opinion on internal control. If there's a scope limitation, we want to qualify or disclaim our opinion on internal control. Now, when we come to non-public company, describe the differences in evaluating, reporting, and testing internal controls for non-public companies. Evaluating, reporting, and testing internal controls for non-public companies. The reporting requirement, non-public companies do not have a reporting requirements. If internal controls are not present and we could rely solely on substantive tests, then we will do substantive tests. However, it is more costly to do substantive tests than to rely on a proper system of internal control. So every organization should strive to implement a proper system of internal control. We want to extend our understanding if needed. Check to see if we understand it properly. Check to extend our understanding to see that if there are any other compensating control that we could rely on. And then we want to assess the control risk and extend the test to controls if needed. If we're going to rely on the control, we'll test the controls. If we're not relying on the control, we need not test the control. Internal control over financial reporting, deficiencies in scope of control testing. If they're very deficient, then we may want to do substantive testing. If we can rely on them, then we may want to do limited substantive testing. And that concludes what I want to talk about in chapter 11 and chapter 12. And this concludes what we want to cover in the course. So from now until the 14th, do your homework for chapter 11 and 12, and also study for your final exam. In about a week or so, I'm going to give you a list of chapters that are going to be tested on the final exam. Chapter 8, Chapter 11, and Chapter 12 will definitely be on the final exam. There may be 6 or 7 chapters on the final exam, but those 3 are going to definitely be there. And they're going to be tested extensively on the final exam. So study them and know them well. Any questions?
Professor,
Yes.
I'm unable to see my test result for exam 2.
You want to see your test results?
Yes.
Okay, what I'm going to do, I'm going to make the last test available for everyone to see their results. Okay?
Okay.
So you could go and log into the test and see your results. I'm going to make it available tonight, so maybe tomorrow or the next day you can see it. Okay?
Okay. And another question, do you like drop lowest grade or not for the 3 exams?
No, I don't.
Okay.
Okay.
And for the final is
All
gonna
right, sweetie. Take care.
yeah.
Have a
Also,
wonderful day.
and on the final is gonna be all multiple choice.
I haven't decided yet. I'll send you an email out in a week or so when I decide on the format of the final.
Okay, Professor, thank
I
you.
haven't prepared it yet, so when I prepare it, I'll send you an email, let you know which chapters and what will be the format.
Okay, Professor, thank you.
All right. Take care.
Okay, Professor. Have a good evening.
It's a pleasure having you all in my class.
Thank you.
Study hard, do well on your final, and do well on whatever you're doing. Okay?
Thank you, Professor. Have a wonderful
Take
evening.
care.
Okay.